Hello everyone, welcome to the channel again. André Cardoso here. As always, thank you for being here. I hope you had a nice weekend. And let's start the week with some Forex updates. And also, I want to talk about the gold, SPX 500, the German DAX, bonds, 10 years, Bunds, Ethereum, the Nasdaq, the FTSE. Let's cover a couple of these Forex pairs that I want to share with you. And let's start with the cable. I shared it before with you. If you didn't check my previous videos, you should. I believe it can bring you some value if you take into consideration those patterns that I tend to identify. If you want to embrace that strategy, or to try to understand how the market forms those advanced pattern formations, so I invite you to check those videos that I published before. And of course, if you enjoy, press that like button. So for today, let's start with the cable, as I said, and I posted before these eventual higher degree cup and handle formation. So we have been tracking these. One of the possibilities, of course, that there's always multiple options. Actually, there's always three options in the market: one for the bulls, one for the bears, you want to move sideways, and that's when you go fishing. And we have been tracking this possibility for a move to the upside above the weekly fractal. So we have, as posted on my previous videos, so we have this previous resistance at 124.48. I admit that a clear rejection of this trend line, of this not a trend line, I'm sorry, this fractal resistance and structure resistance should trigger a move to the upside. So for that to happen, as I said multiple times, you need to see the price breaking above this resistance, pulling back, retesting that fractal again, or that price zone again, and then we need to see the price rejecting, turning this resistance into a support. So once that happens, we can try to identify, or to try to get involved in a move to the upside for the cable. Until there, I still holding my shorts, as some of you already know, for the cable, until the market proves that I'm wrong. Even a breakout above this resistance may trigger then a bigger move to the downside, if that is the case. So we need to protect our trade, taking that into consideration. But as I said before, if the price breaks above and then starts to settle above the daily fractal, that may give you a sign for more upside momentum later. As I said, I'm still waiting for the retracement for the cable. Let's see if that happens. As I said, we never know the outcome of a pattern. We know there's a probability behind the pattern, but even the most perfect advanced pattern formation, or even the most perfect basic pattern you find in the market, will fail you at some point. So I will not say this one will fail or will not fail, because I always rely on my invalidations points. So basically I need to wait for the pattern to invalidate. Until then, I'm still confident in this setup for the downside, because we have these, as I said before, we have this bearish shark pattern completed at 123.93, and that pattern usually suggests, or let's say by default, suggests a deeper retracement to the 50% Fibonacci level. So we have this Fibonacci level at 121.45. So we're still holding this trade until the market proves that we are wrong. And of course, if we are wrong, we start to adapt our mindset to this potential cup and handle formation. So let's move forward. Kiwi, very similar price, very similar, actually the same eventual cup and handle pattern formation. We have a nice handle being pushed actually to these lows. Let me track this Fibonacci retracement, almost a 50% Fibonacci retracement level, and we are now, as I said on some of the charts that I shared on Twitter last Friday, we're still trading inside these triangles, so we need to wait for a clear violation. I point to these fractals, fractal support and fractal resistance, in order to well, let's say that the violation above the resistance will increase the probabilities for the move to the upside, and for that to happen we need to see, as I said for the cable, we need to see a clear rejection of these previous resistance. We need to wait for the price, okay, we need to wait for the breakout of this resistance, we need to see the price starting to find support and then moving to the upside. So that should trigger that momentum also for the Kiwi. But of course, pay attention, because the eventual violation of this support may also trigger another move to the downside, and we will track a move to these Fibonacci retracement levels between 64, 63.60 and 63.20 for the Kiwi if that happens. But pay attention to those eventual cups, both for the cable and for the Kiwi. I also posted this eventual edge and shoulders pattern formation. The weekly fractal support remains under pressure at 133.21, so I still believe that move, actually we have a setup already for the Canadian, taking into consideration the violation of this recent structure. What we are seeing at this point is exactly what I like to see, which is the dollar versus the Canadian rejecting this previous trend line. We can adjust to these previous lows, which covers these next lows also. So we can see the Canadian trying to reject the recovery of this trend line, the previous trend line supports. I admit that we are already in a move towards the 200% Fibonacci extension level, so we have targets at 132.08 for that edge and shoulders pattern formation. That guides us into crude oil, and by the way, I don't have it here. Let me pick that one. Not this one, I believe, not the futures, which was it was no, I need to pick it from here. Exactly. So we have I talk about this possible move for crude oil above the resistance. As we can see, it was not capable to break above the previous highs in fractal, printed at 82.41. In fact, last Friday, after a retest of that resistance zone, we saw the price a very violent move to the downside, and at this point I will target, I will not target, let's say I will wait for the completion of a potential crab pattern at the golden Fibonacci extension level if the price breaks below this fractal support. So a violation of this fractal, I believe, may trigger a move to the downside, eventually a retest or an approach to the bottom of this ascending channel eventually. And taking that into consideration, I will track the possibility to form this crab pattern at the golden Fibonacci level. So we have those ratios, those Fibonacci ratios, and taking those into consideration, I can start to project the bullish crab pattern at the lows. So as you can see, we can spend a lot of time tracking eventual patterns, and the market never trigger your points or your levels. You know, last week, you probably, if you check my previous videos, you hear me saying I was expecting, let's say, at least a move to this Fibonacci retracement at 84.67. So I projected that Fibonacci there, in convergence with this chaining channel and its trend line resistance. So I was expecting at least an approach to these Fibonacci levels. The market fails to break the resistance, so it never produces this move to this level, as you can see. And taking these into consideration, these ratios build inside this range, I can project that pattern. But as I was saying, we may spend a lot of time trying to project a specific pattern, and the market never forms that pattern. And for that reason, you need to stay out. You don't take a risk trading a situation where there's no edge behind supporting the specific probability for that pattern to work. So if there's no pattern, there's no probability, there's no edge, there's no trade. So you stay away, sit above your hands and wait. For that reason, I never know if the price will complete those patterns or not. So we need to wait for those patterns to complete and then react accordingly to the default expectations for the pattern, and accordingly to the invalidation point we can adjust or set our limits for that pattern. So that being said, I will pay attention to a potential breakout on crude oil below this support, but of course if you are expecting, as I am, the Canadian to keep trading lower, you will not expect crude oil to follow that move. So you need to pay attention, because it can also form support without a violation of this fractal, and it can start to bounce from, actually I don't want to say it can start to trade higher or above the previous highs, because that's an incognite, but it can start to form support above the previous lows, and that means we will start to see, or we keep seeing, lower highs or higher lows in this case for crude oil if that happens. So if the market starts to bounce from this price zone without breaking the lows, we can see the price printing higher lows. That is an indication of a bullish trend. So I'm not saying the market is trending, because it's not. As we can see, we have this sideways, let's say moving sideways, parallel ascending channel. It's correct, it's an ascending channel, but it can be transformed into a bearish flag pattern to the downside. If the market violates this short and it starts to approach those fractals, those previous lows, and starts to break those lows, that may also trigger the one eventual bearish flag pattern. So that being said, pay attention to the levels, trade the levels, wait for the patterns, and well, apply a strategy to trade them and wait. For that reason, and taking into consideration the recent Fibonacci ratios, I will not be surprised to see that pattern formed at 75.62. Of course, as I said, if that happens, we may see the Canadian starting to bounce from the current price zone if crude oil keeps, or actually if crude oil keeps trading lower. So that being said, pay attention to those, to the Canadian and the Canadian at the supports, and the WIT or crude oil trading also very close to the previous fractal, and pay attention to those. So dollar versus the Japanese yen. And of course, when you talk about the dollar related pairs, sometimes it's not so related with the DXY, but I believe the current price zone we are facing now for the DXY, and if you go, let's start in a daily time frame, we can see, actually this is a daily time frame. This is last Wednesday 18, so that means that we spent all that time above the 50% Fibonacci, measured Fibonacci retracement level since this support. So we have the previous support, previous resistance, or the most recent resistance, a Fibonacci retracement between those levels. We settled above the 50% Fibonacci retracement. I'm not saying the market will not break these lows. It can also break these lows. In fact, we have a crab pattern, as some of you are aware already, I have a pattern projected at 98.38 for the Dixie, so I will not be surprised to see that pattern at some point starting to emerge if we start to approach this price zone. But as we can see, it has not been easy to break above or to break below this 101.50. So we have the daily fractal support at 101.52. We have the recent daily fractal resistance at 102.89. So this is a daily time frame chart. Let's go into a lower time frame and pay attention to this eventual breakout below or above this price structure. So I believe that a violation of the most recent highs, let me adjust this fractal to 102.18, and we have, in fact, we are threatening the recent support at 101.68. Let me just confirm that. Let me push my, exactly, we have the most recent fractal at 101.68, so we are threatening these previous lows from last Friday, as you can see, after the formation of a new fractal at 102.18. So pay attention to this structure on the Dixie. A move above this resistance may trigger a move to the upside, and of course a violation of the support may trigger a trend continuation for the Dixie. For that reason, of course, everything, I believe at this point, specifically this week, because we have three central banks with important actions during this week, so we need to pay attention to those central banks, and that may create some impact on the Dixie, on the dollar index. So that being said, that may also impact the Forex related pairs, the dollar crosses, of course, and I believe if the Dixie starts to trade higher, may push the Canadian also to higher prices. The CHF, the Kiwi, and the cable may trade lower together with the euro versus dollar, which has been holding quite well. So pay attention also to those levels on the Dixie, because they will impact for sure, specifically during this week. It will impact for sure the Forex crosses and dollar related pairs. So let's move forward. Let's go to the dollar versus yen. Also a nice price structure to pay attention to. I need to update some of these fractals also for the dollar versus yen. So let's take the advantage of being here live to update those fractals. So we have our daily fractal resistance already moved to the recent fractal at 131.12. The same happened with the daily fractal. This is already the daily fractal supports, the weekly fractal, I'm sorry, and we have the recent 4 hours at these lows. So we have a new fractal right there at 129.20, right above the previous daily fractal at 121.02. The recent resistance was also formed at 130.25. So as we can see, we have a nice pattern emerging here between lower highs and higher lows. So that being said, pay attention to a potential breakout above the structure, but also pay attention to this moving average approaching from above. This is a 200 moving average, because I believe an approach to this, let's say a threat to break this daily fractal may exert some pressure for the dollar versus the yen, even though, as I shared before with you, and that pattern starts to vanish if the price keeps moving sideways, so that pattern may start to vanish. But I shared with you before last week the possibility of a move for the dollar versus the yen. And I'm paying attention to 3 specific Fibonacci levels. One of them, the retracement, which is not so significant, because I believe if the price approaches these levels, I prefer to pay attention to an extension above the resistance instead of searching for a retracement of this last swing low. I want to search for an extension of this last swing low. So, and that being said, I prefer to wait for a move to the 113% Fibonacci extension, searching for the alternate bat pattern at the 113% Fibonacci extension level, or the 161 and the formation of the bearish scrap pattern. This is a 4 hours time frame. This may take a lot of time, at least it will not be so fast to form, so we need to wait for that possibility. And the reason why I'm pointing to that pattern is because a violation of this fractal resistance may trigger a move to the upside. So that being said, I will pay attention to those Fibonacci levels, with particular interest at the 113% Fibonacci extension as a first price zone to pay attention, and then if the price fails to find resistance near this price or near this Fibonacci extension level, I will pay attention to the golden Fibonacci, the 161.8% Fibonacci extension level. First steps is the step by step. No, as I said multiple times. So wait for the breakout of this resistance that may trigger a move to the upside, and if you are searching for opportunities for the downside, wait for the violation of supports. Nice price pattern emerging there. And by the way, you can also track the recent momentum for the dollar versus yen inside of a channel. We can also try to track that possibility. I will not be surprised to see kind of a reinforcement of this support line, and that will force us to adjust this recent and probable and eventual pattern emerging from this price zone. So that will force me to adjust these structured supports. But pay attention also to this one eventual channel, an eventual parallel channel between the lows and the highs for the Japanese yen. And by the way, don't forget the major one, or the higher degree descending channel. We're still threatening that channel. So for that reason, a move above this resistance, as I said, should trigger that move to the upside. So there's always a couple of elements that we need to pay attention to. So 200 moving average, previous fractal resistance, previous highs, and the 113% Fibonacci extension. So there's a lot of things to pay attention to. So, but in my opinion, I believe that a breakout of those fractals will trigger a move or to the downside or to the upside. So pay attention to those possibilities for the dollar versus the yen. The same may happen for the Japanese versus the cable, or the cable versus the Japanese. We have a move, we have a 350 points move above the previous fractal resistance, actually above the most recent fractal resistance for the double bottom. So we have a technical double bottom, we have the resistance, the next zone. A violation of this resistance should trigger that pattern, and I have targets for that pattern 350 points above, projected at 165.29 for the cable versus the Japanese yen. We have also projected at the 88.6, and take into consideration the ratios presented between these moves. So we have a move to the downside, we have a pullback, we have a retest of the lows, double bottom, and if the market prints that bat pattern, may offer a nice opportunity to the downside. For now, I'm paying attention to a move above this fractal resistance. Pay attention with this 200 moving average. Okay, pay attention with this. That this is not granted. We need to see a clear violation of this resistance to increase the probability of a move above. Don't try to anticipate that move without a breakout of the structure. The same may happen to the downside. Don't try to rush and anticipate a move to the downside and wait for the violation of support. The same the same strategy I'm using here for the New Zealand versus the Japanese. We have a new fractal. Actually, we have the previous fractal at 84.80. I said that a clear violation of this resistance should trigger a move to the upside, and I still believe that may happen if the price breaks above. So don't try to rush and anticipate. Wait for the violation of the support. I believe that also a violation of these previous lows may also trigger a retest of these fractals printed below. Double bottom right there, default target for the double bottom projected at 87.75. So this is the default target for this double bottom. So of course, waiting for a violation of the resistance will increase with the probability for that pattern to unfold, and for that reason we need to wait also for the Japanese yen. Let's go on gold. Let's cover gold. I said, and I keep insisting on this pattern. This is a bearish crab pattern printed on gold at 1928. We're still waiting for a major, or we can consider a deeper retracement for gold back to the 38%. So that points to 1822. That's or 1821. So this is a 38% Fibonacci retracement of all these move. And for that reason, we're still holding a position for the short side on gold. I shared also this potential head and shoulders formation. So if you prefer a lower time frame event to trade, wait for the violation of this support level that should trigger a move to 1896. That's a default target for this head and shoulders pattern formation on gold. SPX 500, we have posted also this. Actually, we have been tracking this SPX 500. If you go into a higher time frame, we can see this descending trend line resistance being threatened multiple times, and the price not being capable to remain above it. Let's see if that is the case for these weeks ahead. Let's go into a lower time frame. We have also the 127% Fibonacci extension of the first swing high, putting some pressure there. So we are facing an ABCD pattern right there printed for the SPX 500. That should pull back to the 38% Fibonacci retracement level, let's say by default, as a minimum retracement for the ABCD pattern. So pay attention to that move for SPX 500. Eventually on a 2 hours time frame you can track that possibility, and a visit to the 200 moving average, it will not be a surprise. So that makes all sense. Pullback 38% fib, 200 moving average offering then support again after recovering the 200 moving average. It may offer support again. So pay attention to the pullback to 3968, which is the 38% Fibonacci retracement level. That also completes another pattern which is not so clear, but the ratios are there. The Fibonacci ratios are there. So we have the 61.8% Fibonacci retracement as resistance, and then the price pulls back again to the 50%. So usually we wait for the 61.8% in order to fill the criteria for the Gartley pattern. But as you can see, the price didn't touch that golden Fibonacci, even though, just to contextualize this, so we are facing kind of the bearish Gartley pattern. So that pattern offers a very nice probability of a move to the 38% Fibonacci retracement level. That probability decreases a little bit because the price didn't fill the default expectation, the 61.8% Fibonacci retracement, as I said. So we need to see a multiple golden Fibonacci levels being used first as resistance, then as support, and then the 127% Fibonacci extension of this swing completing the pattern. Even though we saw the formation of the ABCD pattern, it's there, the 127 offering resistance, and the price starting to pull back from that price zone. So we need to consider that pattern, and the ABCD pattern makes part also of the Gartley pattern. So, or let's say the Gartley pattern also embraces the finishes, in fact, finishes with an ABCD pattern. So that being said, wait for or pay attention to a move to the downside from this price zone for SPX 500. The same may happen for the German DAX. This is a pattern that we have been tracking quite a long time already. So the pattern forms at January 18, and then since then we saw the German DAX moving sideways. After a first reaction to the downside, we saw the German DAX moving sideways. So we are now approaching again 2 hours time frame. We are approaching the 200 moving average and previous fractal support levels. Attention to a move to the 38% Fibonacci level. This is my default target for the crab pattern printed at the golden fib 15286. And for that reason, so we're still waiting for that move to the downside also for the German DAX. Now let's cover the 10 years and the Euro-Bunds, because I shared also on Twitter the possibility to unfold into head and shoulders pattern formation, not only for the 10 years but also for the Bunds. The 10 years we have supported 114.09, so a move below this, or let's say a clear violation of the support, should trigger a move towards the 200% Fibonacci extension. That Fibonacci is projected at 112.29 for the 10 years, and the Euro-Bund practically the same. It's already breaking lower the support, so we can see a clear rejection of the neck. Attention to this price action right here. This is crucial to understand. When we start to track the possible head and shoulders pattern formation, this is exactly what we want to see. We want to see the price breaking below the support, finding support, and then being pushed to the next zone, rejecting the next zone, and starting to trade lower. So at this point, I have no reasons to not believe the market will trade the 200% Fibonacci extension. Of course, that the projection may fail just by a few points, but that's where the default target for that pattern is now projected. So 135.12. So this is a few points, let's say between the 61 and the 78.6% Fib. So let's pay attention also to those Fibonacci levels, in particular the 78.6, because I want to see that 200% Fibonacci extension being hit. The 78.6 also points, as you can see, to this previous structure resistance. Let me try to make that clear. Not the best option. We have this fractal, and we have the 78.6, so we have a previous structure resistance and the 78.6 in convergence. It's a 134.42. So, but for now I'm pointing to these 200% Fibonacci extension levels. So, and that's when you start to partitioning and to position managing, or position the position management strategy enters in action. So let's cover Ethereum and finish with the Nasdaq. Actually, let's cover first of all. Let's go to the index. The Nasdaq. I also shared that channel, that ascending channel for the Nasdaq. Note this is the default, this is my first target for my bullish 2618 setup. So I shared this setup before. We wait, this is a double bottom, we have resistance above the neck, the price pulls back to the golden Fibonacci retracement level, offering an opportunity to go long. Put your stops below the double bottom because that pattern depends on the double bottom. And that being said, we target the previous lows as a first target zone, and then the market may offer you an opportunity to maximize your profits. So that being said, target it at 12,211. So, and the formation of a symmetrical pattern starts to force the pullback. So that being said, I will not be surprised to see the Nasdaq being forced to pull back to the 38% fib, and that needs to offer support. If that fails me, I have my stops already adjusted below this fractal. If the price trades below this fractal, I'm exiting my trade. So I need to see the price, the limits, let's say in the limit to form support. My support, it will be to 11,653. So this is a 38% Fibonacci retracement from the recent lows, or the previous lows, to the recent highs, in fact. So that retracement, I can support that in order to try to maximize profits later. If that is the case, I'm not saying it will trade lower, but if that happens, I can hold that trade during that process. But if the market fails to find support at the 38, which means it will threat the previous fractal and eventually it will break lower, I will exit my long side position for the Nasdaq. So that position may also take some time to unfold, and if the market offers me the opportunity to hold that position for, let's say, for midterm, I will try to do that. So let's move to the FTSE. I also posted this pattern before, the crab pattern, very similar to the German DAX. We have targets for that pattern at 66.54. So I have a small position size, holding a small short for that pattern, but I admit, and taking into consideration the recent channel, descending channel, I admit that may take some time to achieve. So I will not be surprised to see the FTSE trying to push or trying to recover above, trying to recover above this channel, and then at some point starts to pull back again. So eventually it will print an outside return, which means the price will trade outside the channel or the eventual channel, and then it will trade and it will recover the same price structure. So of course I draw a channel between covering these highs, but we don't have support covering these lows. So at some point you need to adjust and draw it as a trend line resistance covering the highs and a trend line support covering the lows. So basically we are inside of on a wedge and not in a parallel channel. So, but as I said, I will not be surprised to see the breakout above the structure and then the recovery of the same structure. Okay, pay attention to that possibility, a breakout above and then. But as I said, we have targets for that pattern at the 38% Fibonacci retracement level. So I still holding these small position size that I took for the FTSE. Let's finish with let's finish with Ethereum. I shared this pattern before, and I will underline this that I said before. I never know the outcome of those patterns. I never know the outcome. You never know the outcome. No one knows the outcome of a pattern. Okay, there is only a probability behind the pattern, but we never know if that probability will work for you at this precise moment. Okay, we never know the outcome. Play the levels, adjust your risk, understand there's always an invalidation point when you trade a pattern, and respect that invalidation point. If the price fails to unfold into your default expectations, get out of your trades as soon as possible. And as soon as you start to feel uncomfortable, it's the first motive to start to think to get out of your trade. As soon as you start to feel uncomfortable, I'm not sure if the price will respect that level. I'm not sure if the price will trade in my direction. I never know that. I'm not feeling safe if that trade will work for me or not. I'm not sure if I took higher risk for this trade. If you start to question a lot your actions, the first thing you need to do is to jump out of your trades and to think again in your process if you start to feel uncomfortable. So if for some reason you are trading this bearish bat pattern, and if you start to see the Ethereum rejecting to trade lower, and if you start to feel uncomfortable, exit your trade as soon as possible. If possible in profit, even better. Break even, no issues. Try to avoid an exit in negative. But if you need to exit a trade in a negative situation where you took a loss or a small loss, it's much better than waiting for the market in an uncomfortable situation to come for you, and suddenly you take a bigger loss than you should. So if at some reason, if I'm sharing with you a specific pattern, the bat pattern, we have a bat pattern, we have the edge and shoulders pattern formation, so I have a couple of signals pointing down, but I'm not sure if the market will go in that direction, will trade in that direction. As I said, I never know the outcome. I know one thing which is crucial for me, and I believe it's crucial for everyone who trades the financial market, which is identifying the level where I will say to myself, okay, I'm wrong. The pattern will not work for me at this point. It may work tomorrow, or the next week, or the next month, or the next pattern that emerges, it may work for me, but these patterns today, it will not work. So I need to exit this trade as fast as possible, and I have my invalidation point very well defined before entering my trades. So I never adjust my stops during the once open. So after opening a trade, I never adjust my stops. I only break even my stops once the price achieves my first target zone. So let's suppose we had a short for Ethereum from this 88.6% Fibonacci retracement. So let's imagine a situation where I share that pattern with you, which is not true because I didn't share with my subscribers that short position for Ethereum. I shared the chart, but I didn't share as a signal to trade, as a pattern to trade. But even though it's a possible reaction for Ethereum, as you can see, we have a nice range here to pay attention to some levels which may trigger nice moves for Ethereum, both for the upside or to the downside. Even though, imagine a situation where we have an entry point and we have a default target zone for that pattern. So based on that expected reward, you can project your stops, assuming that you'll never enter the market to lose more than what you expect to win. So if you expect a profitable trade surrounding 10% below your entry, you don't put your stops 20% above your entry or 50%. So the maximum that you will put your stops is a 10% stops, which makes no sense because we always try to minimize our losses and maximize profits. So that being said, if you trade for a 10% move, you can try to place a 5%, 6-7% stops. That will offer you a nice situation to trade. So you trade for a 10% and you take a loss once the price moves 5.7 or 6% above your entry. Okay, so that you play that range and you repeat that process over and over again. You make sure that you never lose more than what you expect to win in a specific trade, and you already know that if the price moves towards the stops, that corresponds to, let's say, 1% of your capital, no more than that. So if you lose this trade, you already know you lose 1% of your equity. If you repeat that process for the next 100 patterns, and if all of them, the 100 patterns fails you, you will lose your account after 100 trades. If you start to increase the risk you use for each one of those patterns, if you increase that to 2%, after 50 trades, losing trades in a row, you will burn your account. And if you start to increase that to 3, 4, 5, you will reduce the number of trades that you can repeat that process, and if all of them fail, you will burn your account. That means if this pattern on the other side makes you a profitable situation, that means if you lose 1% using, let's say, a 1-2 risk reward, that means if you achieve targets, you make 2% of your equity. Okay? So if that represents, if that loss or if this eventual loss represents 1% of your capital, that means if the price achieves your targets, you make 2% of your total equity in this trade. And if we repeat that process over and over again, 4%, 6%, 8%, 10%, so on. Of course, in the middle of that process, where you make one good trade, a second good trade, and a third good trade, there will be one trade that fails. And then you repeat the process. After another 3 trades, you will lose one, you will lose another, and you lose another one. And then you lose, and you win, and then you lose again. And that's how it will happen. So, and during that process, you make 2% of profits in your trades when you win, and you make 1% of losses when you lose. At the end of the process, you should get a chart like the one that I will show you, which represents nothing more than an indicative performance similar to this one. So you lose 1% of your capital when you lose your trade, but you make 2% of your equity when you win a trade, assuming a simple ratio of 1 versus 2 risk reward, and an average, a loss never greater than 1% of your equity, with an average reward of 2% average, which means there will be trades where the market will maximize your profits, which means that instead of these 2%, you will take 3 or 4. Okay? So that being said, pay attention to this risk management control. And that's my 2 cents for today, taking into consideration the patterns and the strategy that I use and that I share among my subscribers on Discord. So take this in mind. This is a process that I will repeat here over and over again for the next 400 trades. Never take a loss bigger than 1% of your equity, and let the price maximize your profits. And with the 1-2 risk reward approach, you make sure that you'll make money during this process over time. Don't expect to become a millionaire without an effort. This is not a casino, okay? This is not a gamble where you put some coin and let's expect or let's hope the market reacts based on my luck. Okay, that's not how it works. So I hope you enjoyed the video. Of course, I will be here next days, sharing more content and updating some charts and some patterns. Some of them will emerge during the week, so I will be here posting some charts. But I also want to invite you to join me on Discord. I have a free chat there for those who want to see just a couple of charts there that I post for the free community there. But of course, my main objective is to track investors and real traders to a private channel where I share these trade setups with a decent risk strategy and position management strategy to share with you. So, and I of course, the main objective is to try to create a confluence of ideas between my charts and my trade suggestions with your own opinion and with your own strategy. So if that happens, even better. But for those who have no time to spend in front of the computer, to spend in front of the chart, to try to learn, to try to understand things, I also invite you to join. Of course, you can try to pay for your hobbies during that process at least. So that being said, I invite you to join me on Discord, and from there, from my Discord server, you have also access to my to some of the collaborators I work with links to those institutions. So basically, I welcome you to the project, and I wish you all a very not a very profitable but decent trading week. I'm not expecting to, as I said, we don't expect to become millionaires from night to day. So I wish you a decent trading week, disciplined, and trade safe. See you tomorrow here in the channel.